Welcome to Mark Arnold's Finance. Today's going to be a fun video. We're going to go through the different sectors of the market from most overvalued to most undervalued. And this is always a great guide to help you guys determine, and myself, maybe which sector we want to focus in and buy more heavily in. Because you know, when things are overvalued, sometimes it can be a bubble and it can pop and fall down, and we find that those aren't the best times to buy. So today what I'm going to do is I'm going to reveal the sectors from the most overvalued all the way down to the most undervalued and compare it to my portfolio sectors and give you guys an idea of, you know, the weight of my portfolio versus where my goal is compared to these ratings of overvalued versus undervalued, and give them kind of a rating from 1 to 5 stars. So this is going to be fun, very interactive. It's going to be very transparent because I'm going to be showing my portfolio more in depth in a different type of way. And if you appreciate transparency, give my channel a shot, subscribe. I'm somebody that's very diverse in my content. I'm transparent. In fact, I'm going to show you my portfolio performance here in a second. And the goal is long-term to become wealthy. And this is a channel that is a journey, right? You guys get to join me on this journey and see how I do long-term with my different strategies. So thank you to all of you who are subscribed. I really do appreciate it. And let's jump right into this video. So before we get started into everything, we'll take a quick look at my portfolio performance because we're going to be looking at this quite a bit. So I am only going to focus on the very top left, my portfolio stats. I am now 2% in the green. That's almost $900. And this is a great feeling. We had a decent ride up today in the market. This is Friday, September 9th. And it's helped my portfolio go from the red to the green. And we're going to look at every sector. So be sure to comment if you have any questions about my portfolio performance and any of the sectors or any of the things we talk about today. I would love to have a conversation about it. So the chart we're going to look at is this. And I'm hiding all of it because I'm going to reveal it one by one, but I am showing all sectors combined, and we will see here that it is more undervalued than overvalued. It's 33.69% undervalued and 23.37% overvalued. So right now the market as a whole is undervalued, and we're going to reveal the sectors that are more undervalued, where I feel you should maybe spend more of your attention and time on in trying to find good companies to buy. So yes, use this as a guide, but not as something that is, you know, a rule of law, because different companies can definitely still have opportunities even in the most overvalued sectors. So let's get started and let's reveal the most overvalued sector right now, and that is utilities. You will see here it is 40.35% overvalued and it is 19.3% undervalued, with 40.35% neutral. So going forward, I'm just going to state the overvalued and undervalued, but it'll have everything here in front of you that you can look at. So utilities. If we look at my portfolio, I have just one ETF, and that is Foodie. So utilities, I feel, is a boring, predictable sector. And right now I'm at 2.51% allocation of my portfolio, and that's exactly where I want it. So with utilities being more of a boring, predictable sector, I don't feel long-term it's going to be one of my higher performers. So I will add to this when it's undervalued. And right now I give myself a 5 stars because it's right where I want it. It's all in an ETF, so it's diverse, it's more safe. So utilities, I felt I'm doing well, and I have no need to add to it right now, and especially as it's the most overvalued sector in the market. So we'll go now to the healthcare sector, which is the second most overvalued sector. It is overvalued by 44.12%, so even more than utilities, but it's undervalued more at 20.59%. So with the healthcare sector, I feel that that is one that should grow very healthily the rest of my life. It's a very needed sector, and one that I think will just expand as people get older and there's more cures and treatments for different things. But this now makes up 9.14% of my portfolio. And I will say all my companies, and there's one ETF, are in the green. I have AbbVie, J&J, and FHLC, which is the ETF. So with it being 9.1% of my portfolio, my goal for this sector is 10% or less. So right now I'm towards the high end, but still under that 10% range. So I feel I'm doing really good. So because this is the second highest overvalued sector, I will be waiting before I may add to any of these companies. Of course, AbbVie has done extremely well for me. J&J, I feel, could get into a territory where I'm in the red and might want to add an average down. But being that it's 4.93% my portfolio right now, it's a company that I'm okay just holding where it's at. So if the opportunities arise, I will add to this sector. But I give myself 5 stars because it's just below my high end of my goal of 10% in this sector. And because it's the second most overvalued sector, I have no need to add to it at this point. Now, the next sector, which is the third most overvalued sector, is materials. We will see here that it is 24.39% overvalued and 21.95% undervalued. Now, materials to me is also a boring sector. It's somewhat predictable, and I don't think it'll be a big winner or a big loser long term. It'll kind of be more in the middle, probably the lower middle range of my portfolio long term. So right now it makes up 2.92% of my portfolio, and both of them are in the green, both of my holdings. I have DuPont and FMAT, which is an ETF for the materials sector. My target is 3% of my portfolio, so I'm right there just below that at 2.92% as mentioned. So I will add on any weakness or undervalued territory in the future. Now I give this 4 stars, so I knock it down a star because of DuPont. It's only 0.8% of this sector, and look at it, it's up 15%. In fact, this stock was up, I think, like close to 40, 50%, maybe even 60% at one point. So I wish I had a little bit higher allocation to it. So because I'm probably low on my allocation with DD, I just took off 1 star, but not bad overall. I'm doing pretty well in the materials sector. Now, the next overvalued sector is real estate. We will see here they're 21.74% overvalued and 23.91% undervalued. So they are more undervalued than overvalued, but as a whole, collectively, they're the 4th most overvalued sector in the stock market. So with real estate, I love owning REITs, the stock market real estate opportunities you have through stocks to own real estate without having to do all the hard stuff, the maintenance, the upkeep, so on and so forth. So I think this will be a very strong sector for me long term. Right now it is 12.22% of my portfolio. All 4 of my companies and 1 ETF is in the green. So I feel I'm doing really well. I got in at good times. Plus they're all good dividend paying companies, and in whole the real estate sector is a good dividend paying sector. So being that it's 12.22% right now in my portfolio, allocation, my goal is to get it between 10 to 15%, so I'm kind of in the middle. So I feel I'm doing well, and I will just add on weakness. And the one that is the highest allocation for me is Vici, and that's the one I'm most bullish on. So overall, I feel I'm doing very well, so I give it 5 stars. So the next one, going from overvalued to undervalued, we have industrials. So this one is 32.04% overvalued and 24.27% undervalued. So industrials is similar to materials to me, but maybe slightly stronger long term. So it might do a little bit better than materials long term, in my opinion. And it's currently 5.62% of my portfolio, and I feel 5% is my goal. So I'm slightly over that range. And, you know, I think that 3M is the big negative here for me. I think I went too heavily into this company. So when it gets in the green, I will trim it. That is what I plan on doing with 3M, and I think long term it will get in the green. I am pretty confident about that. I just did a video on it. In fact, be sure to watch that. But the summary is that I think 3M will be back in the green within a couple years, and long term will actually be a decent investment. But I do want to trim. I feel like I'm way over allocated to it. And maybe put more into that ETF FIDU. So because of that, I will give this 3 stars overall because I went too heavily into 3M. So I might average down slowly in 3M, but other than that, I don't plan on adding too much to industrials. Now I feel we're moving from more of the overvalued sectors to more of the undervalued sectors, and kind of right in the middle is technology. We will see here that they're 23.64% overvalued, and 27.27% undervalued. So they are slightly more undervalued than overvalued. And the tech sector, for me, I'm hoping it will be my best performing sector long term. I feel it's still where the big opportunity is. And so right now it's 32% of my portfolio. My goal is 25%, so I'm definitely overweight right now. Meta was my biggest mistake. It's not because I don't think it's a good company to invest in. I just think I invested in Meta at the wrong time. If I waited one more month, I would have caught that big fall after that big fall occurred, and my average would probably be slightly in the red, if not even in the green at this point. So I still believe that Meta has a future, but I will trim this position someday when it's in the green. So I give my tech sector 4 stars because I'm overweight and because of Meta. But other than that, I think Cisco, Amazon, and Microsoft are very strong companies and all have great allocation percentages to them. So 4 stars is what I give technology. Moving on, we go and move to the next undervalued sector, and that is the consumer staples sector. So this is always a good sector to have. It's a solid industry, should be a right in the middle kind of industry for me, a sector, shall we say. Long term, its performance I feel will be right in the middle. And right now it's a 3.61% of my portfolio allocation, and my goal is to get it between 8 to 10%. So I'm definitely undervalued. Now we're gonna have to obviously talk about Tattooed Chef. This is a company that's definitely risky, more of a speculative stock. I took a chance on it. I got in at the wrong time. I should have took a step back and realized that these small speculative companies, it wasn't the time to invest in when I got in, so I'm down 57.42%. I do think this company has good potential to be a big company someday, be in the green at some point for me, but I'm just gonna have to track this one quarter by quarter and see how it does. But I will trim Tattooed Chef, if not sell it, depending on what its outcome is in the next couple of years. Of course, if it turns out to be a very strong company, then I'll consider keeping what I have. But because of that, because I went too heavy into a risky stock, and where Coca-Cola is definitely a very sturdy stock, I'm gonna give myself 2 stars. I don't think I did great in this sector, and so that's something I need to improve on. And yeah, so we'll see what happens, but this might be a sector that changes for me in the future. Now, the next undervalued sector is energy. Now, energy right now, it looks like it is 20% overvalued, but 33.33% undervalued. Energy still has decades of growth, I feel. This sector will adapt and innovate with the change to, electric and all the other different type of energies that we're going into, alternative energies. And it will change with that and adapt, but it's going to be a volatile sector regardless throughout the next couple decades, I feel. Right now, it's only 1.12% of my portfolio. A while back, I sold half of my position in this ETF, which is Fenny, at its peak. So I do want to get back in and add more at some point. And my goal for this sector is 5%. So I'm going to give myself 4 stars because it is a volatile sector. So it's okay that I'm a little low. And I took great gains. I took over 100% gains when I sold half. And I will have the opportunity later to bump it up, I'm sure. So right now, 4 stars, and I think it's okay to have a very low weighting in this, but I do want to bump it up within the next couple years. Now, the next most undervalued sector is discretionary. You will see here that it is 17.95% overvalued as a sector and 41.03% undervalued as a sector. So now we're getting into the good opportunity sectors, I feel. Now, this is a great sector that I think will perform really well long term. Right now, it is 6.18% of my portfolio, and that's all in Home Depot. I will be adding more to Home Depot, but I also want to add one more stock to this sector. And as I've said a few times, I'd love that stock to be Costco, but I definitely want to get in at a good valuation with Costco, where I feel it's a little too overvalued right now for my liking. So being that it's 6.18% of my portfolio, the goal for this sector is to get it to 8 to 10% of my portfolio. So I'll give myself 4 stars right now. I feel I have a good solid company in Home Depot. I'm not too far behind my goal, and it gives me an opportunity to add another company. So 4 stars overall, and I will be adding to Home Depot and hopefully Costco, getting into that position sometime this year or next year. Now, the second most undervalued sector, before we get to the first, is financials. It is 13.51% overvalued and 47.3% undervalued. So financials is a great sector. To me, it's a medium growth, long-term sector. It'll provide good returns and be at the top of the medium range of my, kind of outlook. And so now it's 10.94% of my portfolio, and my goal is to keep it between 10 and 15%. So I'm in that range, so I'm doing good there, and I feel I have good companies and a good ETF, which is FNCL. I have Ally, which I'm very bullish on. I think it's highly undervalued, so there's great potential. T. Rowe, which I think is a very predictable company. When the economy goes down, it does. When it does good, the economy, then T. Rowe does good. So that kind of helps you know when to add into T. Rowe, which I feel is right now, as well as Ally. Bank of America, I got in very early, so it's hard for me to add when I'm up 34.54%. I was hoping that this stock would go below $30. It never made it. Overall, though, I think I'm doing extremely well, and this is a sector that pays good dividends as well, so I give myself 5 stars. I think I'm doing really well in the financial sector, and I'm excited to keep adding to T. Rowe and Ally and maybe FNCL within the coming months. So that leaves us with the most undervalued sector, and that is going to be communications. It's 9.09% overvalued, but a staggering 63.64% undervalued. Now, I think that obviously this shows it's the most undervalued sector, but I feel that it may stay that way for quite some time. Just because it's the most undervalued sector doesn't mean it's going to rebound quickly and move out of that spot. It could stay there for quite a while, but it's still presenting us an opportunity to add now more than any other time. In my portfolio, that sector makes up 3.38% in my portfolio. And I'm not sure with either of the stocks I have, AT&T or Warner Bros. Discovery, what I will do. So I don't think either of these companies are very strong. AT&T, I definitely will cut when it's in the green and may even sell. And Warner Bros. Discovery, I just don't even know what to think. Of course, AT&T spun off that part of its business, so that's why I got those shares. I'm still analyzing everything with this sector. So AT&T spun off, part of their businesses to focus on their telecommunications side, which they're good at. They're cutting debt. I feel they're doing all the right things. So I feel this company will be in the green at some point for me, which I will cut it or sell it altogether. But it's not my strongest sector, and it actually may be the weakest sector out of all my sectors in my portfolio. So yeah, T will recover, I think. Warner Bros. Discovery is a very small position, keep in mind. It's only 0.84%. So because of that, I'm going to give myself 2 stars. Instead of 1 star, I was thinking about it, but I'm going to give myself 2 stars because Warner Bros. is a very small position, and AT&T, I think they're finally doing the right things to turn this company around, but it's still going to take a while. So I want to average down on both these companies. I feel this is the time to buy if you are going to buy. And with a 3.38% portfolio allocation right now, I want to get this to a 5% allocation. And so that's my goal with this. So yes, it's the most undervalued sector of the market. I feel like I don't have strong companies in this sector, but I don't think there's a lot of great options anyways. So regardless, I think it's time to add. So that's what I'm going to do. So overall, I think I'm doing very well with my portfolio. And I think that this, I'm going to just put this up here, the whole thing real quick, that this showing the most overvalued to undervalued, be sure to note this down because going forward in the next couple months, this may help you just further analyze and put a strategy forth to buy some companies, whether you already have in your portfolio or ones you're considering. Let me know what you thought of this video. I thought it was a fun video to do, an important video to do, because any kind of statistics to share like this are just going to help you gain more knowledge about the current markets and maybe what you want to do, where you want to buy and focus on, and where you don't want to focus on. So I'm definitely going to focus on financials, communications, and discretionary more heavily than the other sectors. And then individually as companies in the more overvalued ones, I'll just have to, look at those, and if there's any big drops, then those might come into opportunity play for me to add to my portfolio. So with that said, let me know what you thought of this video, the sectors. What sectors do you plan on adding the most to probably the rest of this year, and which ones will you stay far away from? I'd love to hear your opinion. And with that said, we'll see you guys next time on Mark Arnold's Finance. Be sure to subscribe for a channel that's very transparent. And I'm always willing to take your recommendations on videos you'd like to see in the future. So be sure to subscribe, follow my portfolio performance, my path to becoming wealthy. And you guys have a great day, and we'll see you next time.